Breaking news. The US and China have just reached a preliminary trade agreement, sending shockwaves through the market. Tariffs are slashed, but what does this mean for your investments? And why is Trump sounding off again? Stick around, because we're diving deep into the numbers and the real story behind this deal. Hi, welcome to Market Policy Watch, where we cut through the noise and give you the unfiltered truth about the economic numbers that move the market. Today, we're breaking down the latest US-China trade deal and what it means for the US market in the short term and the long term. The US just slashed tariffs on Chinese goods from a massive 145% down to 30%. And China has responded by cutting its tariffs on US goods from 125% to just 10%. We'll take a closer look at why these numbers are what they are, and what this historic agreement could mean for your portfolio. Plus, we'll talk about why Trump is feeling confident about the market. Let's break down these tariff changes. The US tariff on China is now at 30%. But wait, didn't it start at 34% before the escalation? You're right. The initial tariff back on April 2, 2025, was 34%, but the US is pausing a 24% portion for 90 days. So, the final figure is 30%. And here's a key detail: it includes a significant 20% tariff on fentanyl-related drug imports from China. This deal isn't just about goods, it's about multiple layers of trade negotiations. Across the Pacific, China has agreed to reduce its tariffs on US goods, slashing them from 125% down to 10%. While we don't have all the details yet, this move signals a willingness from China to further engage with the US and potentially increase trade between the two economic giants. If these cuts hold, it could ease some of the trade tensions that have been simmering for years. After the announcement, the market reacted big time. The S&P 500 surged by 3.26%, closing at an impressive 5,844.19. This is a major jump, reflecting investor optimism about reduced costs for businesses and a potential boost to the economy. It's also a sign of how sensitive the market is to these US-China trade dynamics. Before we get too excited about the immediate market jump, let's pump the brakes for a moment. This deal is only a preliminary agreement. The future of these tariffs, whether they stay at 30%, go lower, or even rise again, is still up in the air. It's a moving target, and the outcome hinges on future negotiations and how both nations follow through. Stay tuned, because these discussions are far from over. So, what does all this mean for you as an investor? Well, the market's immediate jump suggests there could be short-term gains ahead, especially for sectors tied to international trade. However, the uncertainty about future tariff levels means we could still see some volatility. Now might be a good time to review your portfolio and think about how these developments fit into your long-term strategy. The key to success here is staying informed and adjusting as the situation evolves. Now, let's talk about Trump. His calls on the market have been spot on lately. On April 9, 2025, he tweeted that it was an ideal time to invest, and right after, the S&P 500 surged nearly 500 points. Then, on May 8, 2025, his prediction of an economic boom was followed by another major market increase. Since his April 9 tweet, the S&P 500 has climbed by over 17%. These strong market reactions show how much weight investors should be giving to his public statements. Trump has consistently argued that US trade policy with China needs to be more balanced. He's been critical of past agreements that he believes put American businesses at a disadvantage. With his tough stance on tariffs, he aims to push China to address issues like intellectual property theft and currency manipulation. Let's take a moment and hear from Trump himself.
In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs. because they don't want to pay 25, 50, or 100% tariffs, so they're moving them back to the United States. The talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. But the biggest thing to me is the opening up. I think it would be fantastic for our businesses if we could go in and compete with China. It would be a lot of jobs for China. It would be, I think, at a time when they can frankly use the jobs. And that's what we're talking about. So that's a very, very important element to add. So when Scott, I watched him speak the other day, and I think he didn't want to say it, but I said, it's okay to say it. Look, if we don't get it, we don't get it. But if we don't get it, it won't be a positive thing. But if we do get it, I think it's maybe the most important thing to happen. Because if you think about it, we opened up our country to China. They have very few restrictions. And they didn't open their country to us. Never made sense to me. It's not fair. And they've agreed to open China, fully open China. And I think it's going to be fantastic for China. I think it's going to be fantastic for us. And I think it's going to be great for unification and peace.
This preliminary trade deal between the US and China is a major development, and the immediate market response shows just how significant it is. But remember, the story isn't over yet. We'll continue to track these negotiations and bring you in-depth updates as they unfold. Be sure to like this video, subscribe for more unbiased market insights, and hit that notification bell so you never miss an update. What do you think about this trade deal? Drop your thoughts in the comments below. See you next time, where we'll continue to uncover the truths behind the numbers that move the market.